Hey TMFG community, in today's episode of Ask TMFG, we're going to be taking a look at just how the markets have recovered so far in quarter three. Remember, if you do enjoy the content, like, comment, and subscribe to the YouTube channel. We love doing these videos for you. In today's episode of Ask TMFG, Carlo and I are going to be taking a look into just how the markets have recovered so far throughout quarter three. So far, we are off to a negative start at the start of 2022, but things are beginning to turn around. So, Carlo, just how well have the markets done in quarter three?
Thanks, John. That's it. And before I talk about any number at all, we don't subscribe to trying to play the market in the short term at all. All we want to talk to you about is what's happening and why you shouldn't try to be timing the market. And so, as John had just mentioned, year to date, the market is still down. However, in the third quarter of this year, from July 1st to August 19th, we've seen a turnaround. Just to get specific, the S&P TSX composite is up 6.6% so far in the third quarter. The S&P 500 on the US side is up 11.7%. And the MSCI EAFE, which stands for Europe, Australasia, Far East, and that is a proxy or represents the developed markets internationally, it's up 3.3%. So over the course of almost 50 days, the market has completely turned around. Just to give a relative performance, the DFA Global Equity Portfolio, so that's all equities, all exposure to all geographic regions, is up 8% same date range. So what do we do with this information? If you're sitting on the sidelines, it's time to get into the market. Regardless if we've seen the market recover this much, there's still recovery to be done. But it just it begs the question, why do you not get into the market, or why do you ever get out of the market when we know that declines are temporary and recoveries will occur? So that's everything that we wanted to talk about today. We just wanted to talk about how quickly the market can drop and how quickly it can go up in value. And if you're staying invested, not getting involved in the day-to-day, you'll capture the recovery every single time.
Excellent points there, Carlo. It always begs the question, right? When we're investing for clients, the thought process is, is this, first of all, figure out the time horizon. Is this money directed for a long-term investment? Oftentimes, that answer is yes. Well, when markets do fluctuate like this and they do go down, we often pose the question, do you believe that the markets will be more valuable in the future than they are today? Oftentimes, the answer is yes. The only issue is we don't know when that will happen. We don't know the timing aspect of the markets, and we never will. So just staying invested and staying throughout this process, it's a bit of a roller coaster ride, but just like you see the downs, you'll see the ups as long as you just remain on the ride. So that's our episode for today. If you do enjoy the content, remember to like, comment, and subscribe to the YouTube channel. Until next time, I'm John Iaconetti.
I'm Carlo Cansino.
And this has been Ask TMFG.